Hey everyone, Greg Clement here with two of my partners here at Realeflow, Don Fowler to my left, Jeff Watson over here to my right, and we're going to get started here and talk about really the mindset of a real estate investor, obviously the mindset of the market, what's happening right now with coronavirus and COVID-19, how it's affecting the U.S. in particular, and specifically the real estate market. The first thing that we wanted to talk about today was the launch of a new resource called InvestorShift. So if you go to InvestorShift.com, so just like it's spelled, InvestorShift.com, that will redirect to a resource page at Realeflow that we're going to be updating daily with content relevant to what's happening right now, the major shift that we see that's going to happen in the market because of COVID-19 and because of everything that's happening. We had a 10, 11 year bull run with the stock market, and I think the market was looking for a reason or reasons to reset itself, and obviously it did the past couple weeks. The real estate market has been really good. If you've been a real estate investor the past 10 years, you've likely made some money in the market. And so we think because of this, there's going to be an opportunity, but only if you sort of apply some principles that regardless of what market you're at in the country, if you have a plan and then you implement that plan short-term and long-term, you could have a lot of dramatic success over the next 12 to 18 months. So InvestorShift is going to be a resource focused specifically on that, on up-to-date articles and information that you need as an investor. For example, the stimulus package that was passed this morning, and they're working, I think, Jeff, on the last few pages of legislation there. Is that accurate?
They're still writing it, Greg. It went from 247 pages to close to 2,000 pages, and they're still writing.
So it looks like that's going to hopefully be done today. We're going to talk about that and how that impacts you as a real estate investor. Don Fowler is going to be leading the charge here at Realeflow with InvestorShift, and really we're going to be doing, or he's going to be doing, these weekly calls. So Don, you've been with me for over 10 years. You're a resident of Florida. Why don't you tell everybody a little bit about you real quick?
Yeah, so my main role at Realeflow is a Chief Business Development Officer. So I handle our strategic relationships like Home Depot, for example. But I'm really excited about this. I'm shifting my role right now and really in charge of this InvestorShift.com and these calls. We're going to do these live calls every Wednesday at 3 p.m. Eastern. So just mark your calendars now. We're going to have a great call today for you. And then next week, we've got Jason Medley. It's going to be an incredible call. He kind of gave me a little insight on what he's going to talk about next week. So that's really, really exciting. But InvestorShift, just to add a little bit to what you said, Greg, it's really a curated site specifically for you as a real estate investor. So my team, we're going out and looking for all the stuff. Right now, the news is changing hour by hour. So we're pulling all those things together, and then we're giving you basically a daily recap of all the top news stories and how it affects you. So you don't have to read the whole thing. You just click on it, get a quick summary, and then if you want to read the whole thing, we give you the link so you can go ahead and dig further if you want. So that's really my focus over the next however long, and it's really exciting for sure to give back to the community.
Yep. Cool. So Don, I think how we wanted to start today, this is our first call, our inaugural call. We wanted the three of us to talk about just really what's happening. I know you have somebody, an immunocompromised person in your household. I mean, how has coronavirus, how are you guys doing in the South? Because it's probably a little bit different than up north.
Yeah, we're actually in a hot spot. I'm in Broward County, just above Miami-Dade, and so we're in a hot spot. And I do have somebody in my personal household that's immunocompromised, and then my mom lives just a little bit north of me, and she's got COPD. My sister is incredibly asthmatic. She's got a weak heart, and then on top of all that, she takes care of a special needs child. So COVID-19 is definitely something that we all think about daily. And it's definitely, we're going to get into this business discussion and we're pushing forward, but it's on the front of our minds for sure. And I know people out there are dealing with it firsthand. For our company, we know somebody in LA that is in ICU right now that's fighting for his life. So that's not lost on us by any stretch of the imagination, and don't think it is when we start talking business and getting into the nitty gritty. This is definitely affecting all of us.
Yeah. I think from our perspective here in Ohio, it's crazy. I guess, I'm trying to think of the right words. The world shifted. It definitely changed the past couple of weeks for sure. I think we as citizens of the U.S., we have to do what the president and what our governors are telling us to do. So whether, you talk to some people who think this is overblown, right? And you have that end of the spectrum and you have the other end of the spectrum. No matter where you're at in the spectrum, you have to be on this side where you're staying at home. You're quarantining right now. I think that's, our responsibility as a citizen is to basically slow down, take a breath. Right, at Realeflow, we completely went virtual. So our office has been shut down for about 10, 11 days. We're in Ohio, but even before the governor, we did a test run the week before where everyone worked from home for 3 days, and it worked very successfully. So so if you've been getting support or interacting with the software at all, it's being done remotely from houses all over Northeast Ohio, which is, we're well prepared for something like that, but I know a lot of businesses aren't. It's very hard to work from home. We know some bigger companies that, it's darn near impossible, but I think we have to buckle down and get through these next couple of weeks, up to a month even. And then we're going to talk about, again, how investors can deal with what's going on. But Jeff, any thoughts on that from your end?
Stay home, stay safe, wash your hands, and just think about everything that you do. Yeah, you might want to sneak out, like I might want to sneak out to Chick-fil-A. Imagine that. Even though it's the drive-through, no, you can't do that. I might want to hit the drive-through at Starbucks. No, I can't do that. Stay home. It's just for a couple of weeks. You'll be fine.
Exactly. It's good time to connect with the family, even on a deeper level. I think that's what I've taken away from this. So
I think it's an opportunity to grow too as a person.
Yeah. Yep. It's fun watching to see how my kids as adults are interacting and weathering this storm. It's good. Yeah.
Good. Well, let's dig into this. So, Jeff, I know you're connected on the Hill. I don't know if everyone knows this on the call, but Jeff goes out there pretty often into DC, and he's getting daily updates on the Hill right now, and the stimulus package that is being passed, hopefully, right now. I'd like to get into that a little bit. So, Jeff, can you give us the highlights right now, and then we can kind of dig in a little deeper?
4 basic big highlights. This bill is going to pass the Senate. That's what's happening now. We've got a deal in the Senate. This bill originated in the Senate. The House of Representatives has not yet acted on this bill. If it's unanimous, then the Speaker has authority to pass the bill without bringing back everybody. If it's not unanimous, then the Speaker's going to have to bring all 435 members of Congress back. A lot of them aren't going to come. There's logistics. Either way, I suspect that this bill, even though it's still being written, is going to be signed into law by President Trump in 7 days or less. They have expedited this baby. That's the first thing I want to tell you.
We're talking specifically about the CARES Act, the $2 trillion economic stimulus act that deals with small businesses, deals with individuals, big corporations. We're going to focus on small businesses in a second, but there's a lot of stuff being passed. That's what we're talking about right now.
Right. This is the act that we're talking about, is the CARES Act, the Coronavirus Relief Act that originated in the Senate, SB 3548, but it's got a companion House. We'll see. Anyhow, there are 3 big things that come in this bill that we want to cover at a high level on this call. Number 1, the $1,200 per person adult taxpayer, $500 per child credit. Then there is the small business loan program with loan forgiveness for payroll purposes and operational cost purposes over a 4-month window of time. And then the last thing is, and this is the one nobody's really been talking about, but boy, it got my attention when I saw it in the text. Yeah, folks, I'm that nerd. I'm reading the stuff as they're writing it. Regarding retirement accounts, IRAs and 401ks, the ability to reach inside without a tax penalty and take out up to $100,000 from your IRA or your 401k. That is massive. Now, you can put it back in 3 years, or you're going to pay taxes over 3 years on it. So it's a sweet deal either way. Rule 72T has been suspended relative to this, but I'm getting nerdy. Let's get into the details.
Let's start there. So there's 3 big pillars I take away from the CARES Act. Is that an accurate statement, Jeff?
That I see that's relevant for Realeflow users, yes. For real estate investors.
Let's start at the last one and then work our way from 3, 2, 1. So the last one, it's $100,000, and that's your 401k or your IRA. Is that a correct statement?
If you have the money in either of those types of accounts, you can take it out, provided you can claim or prove that you've had a business setback or financial loss as a result of coronavirus COVID-19.
Okay. So,
but you don't need to be a business owner.
You do. Anybody that's got the account.
Basically, everyone in the United States, I think, could say, right, we've had a financial setback. So Jeff, up until this point, it was how much could you take out, and when did you have to pay it back, and what are they changing it to?
Okay, so before this bill, you had what we called the 60-day rule, where you could reach inside your retirement account and you could take out the money from there, but you had to get it all back in 60 days. If you didn't make it in 60 days, it was a horrible tax penalty. They've now taken that 60-day rule and stretched it to 3 years.
Okay, so I could theoretically take $99,999 out today, right?
Theoretically, yes.
Then I can use that money for cash purchases on a house? And is that now for the profit, what happens with the profit made on that split?
It's taxable. It's taxable income.
Okay.
Okay. So you're going to make a profit on. You'll make a profit. You'll pay taxes if you're taking the money out to do that kind of a deal. Yes.
Okay. Then I could still keep that cash, reuse it again, up until 2 years, 364 days. Is that an accurate statement?
If you can guarantee that last closing happens within that 3-year period of time and you get all the money back, yes, you can do that. Yeah. And so this really applies for the investor that's been doing this, and all of a sudden their private lender freezes up on them. And now they've got a deal that they've got to fund. Well, here's how you can go fund that deal.
So Greg, I don't want to take us too off topic, but private lending, what do you see now with private lending versus a 401k IRA pulling that out? You think lending is still there right now at this point?
Yeah, for sure. I think that private lending, I think over the next month, right? Anybody that has any assets, liquid assets, whether it's the stock market, you had money in the bank, you were a private lender to another investor, you have money in real estate, you have equity in a house. I mean, everyone, because of what's happened the past couple of weeks, everyone's puckered up for sure. Everyone has tightened up. But I think a lot of people are realizing that the sky is not going to fall, right? That for some people, now granted, there will be some restaurants that never reopen, right? There will be a lot of small business, a lot of entrepreneurs in America, they literally live paycheck to paycheck, or I should even say day to day, right? Where a lot of individuals who get a paycheck, they're living paycheck to paycheck, they pay their bills. Entrepreneurs, many of them rely on that day's revenue to pay expenses for tomorrow. So it's day by day. So I do think, and we're going to talk about this in a few minutes, about how this is going to affect the economy a little bit more, small business specifically. But I think people who had assets, they are going to want to loan those assets, right, those assets. And with the stock market being as volatile as it is, and with interest rates being as low as they are, I think private lending is going to be an extremely, attractive option for people for sure.
Okay, good. So anything else to add to this 401k IRA distribution or the ability to pull that out tax-free. Anything else you want to add, Jeff?
I'm sure there's a lot of rules and regs that are going to come out on this one, but it is brand new. Just take the 60-day rule and stretch it to 360 times 3. And that's the best way to look at it right now. And you can only do it up to $100,000. And you have to be able to prove that you either lost your job, had a decrease in earnings, had a setback in some way due to COVID-19.
Okay.
So
cool.
one last thing, I think, Jeff, you would agree with this, that if people can invest inside of their IRA, that's better than taking money out, investing it, paying taxes, putting it back. So if you can do it the traditional old-fashioned way, you want to do it that way.
But Greg, that's exactly right. But now you're speaking my love language, dude, because that's what I do all day long for clients. So yeah.
Right. So we actually we're going to have some resources in April, self-directed IRA resources that we're building inside of Realeflow right now. So if you're an active Realeflow user, that's going to be some pretty exciting stuff we'll have that we're launching the next couple weeks.
Yep. All right, cool. So now let's take the three things that you mentioned. The second thing you said was it's affecting corporations and helping corporations with payroll, payroll tax, all those things. Explain that, because I would say that most of the callers right now are just have their LLC, or they don't have employees, but some do. So let's take them through what benefit there is for them that they could take advantage of.
So it's a small business loan. Okay. And I'm seeing varying figures and facts on this. Originally, it was proposed that you could borrow up to 4 times what your payroll was for a 4-month period of time, plus your debt service, plus your rent, plus your utilities. Now I'm seeing that number has been cut down to 2.5, something that Marco Rubio just put out in a 1-pager versus what I'm reading in the actual text of the bill. So I'm like, trying to figure out, Greg, we're talking about a moving target, right? Because they're still writing the thing, okay? But this is important because this is not for big companies. This is for small companies. This is for somebody who they're their only employee. And as long as they're paying payroll tax and they're doing it right and they can prove it, they need to start opening up a line of communication with their local SBA lender. What bank they deal with is their SBA representative. Get your records together on that. What was your payroll like the last year? What's your rent? What's your debt service on any other existing capital inside your business, machines, equipment, things like that? Does this cover rental houses? No, it doesn't. Don't think that it does, okay? And then put your package together and get in line early. Don't wait on this. Be ringing the phone tomorrow with your SBA guys.
Jeff, this is so a week ago or a week and a half ago, they launched the Disaster Relief Act or fund, which allows businesses to go directly to the SBA and apply for a loan of up to $2 million. Okay, that's separate from what we just talked about. So in every state in the U.S. is now approved, and basically an entrepreneur, a business, can apply for a loan directly through the SBA. We're going to have a link to this loan program on InvestorShift.com. So we'll have a link, but that's different than what we're talking about. And that's a loan, 3.75% interest rate, up to $2 million, depending on a lot of your business expenses, underwritten by the SBA. Nothing to do with a lender, with Chase or PNC. Okay. What you just said, Jeff, is that, if you have not yet, wherever you do your banking, okay, so for everyone on this call, wherever you do your banking, you should be reaching out to your banker. And hopefully, there's people on this call right now that are like, I don't have a business banker. Well, call your bank up, Chase or whoever. There's 800 SBA lenders across the country. Call them up and basically talk to that person, whoever does the business banking. If you have a relationship, that's great. What Jeff's talking about, the CARES Act, you will be able to get a loan through your bank, fully guaranteed by the SBA, 100% guaranteed, which the SBA usually guarantees 50 to 65% of loans. So it usually takes 6 to 8 weeks. So when we bought the farm that we're on right now, we actually purchased it. We ended up, after we did all the renovations, we put an SBA loan, and it took almost 3 months. Well, that's because the bank still had to do all the underwriting. With this program that Jeff is talking about, essentially the bank is fully guaranteed. So the underwriting, again, this is they're talking about it today, right now, as we're having this call. It's supposed to be within a few hours, and then getting access to funds within a few weeks. But Jeff, you mentioned something I think that's critical there. Let's say I'm a business, a restaurant, or a real estate company, whatever, and I take out a loan for $500,000, and then over the next 3 or 4 months, I keep my business going. I have a couple of employees, or I pay myself as an employee. I have payroll, I have rent, I have utilities, there's expenses. I could even have a mortgage if I own the property. That percentage, some percentage could be forgiven, which then it turns into a grant, because that's a very powerful concept right now. And as soon as they pass this, as soon as we have the final information, we will synthesize this information and get it out to everybody through, InvestorShift, through Realeflow. But that's the beauty of this. So all or a portion of that loan could be forgiven, and you will never have to pay it back. And they're even talking about 12 months of deferred payments. So if you, and the qualification, anyone that owns a business in America qualifies for this. You can defer payments, payments for the first 12 months. So it's a pretty remarkable, it's 357 or $367 billion, out of the 2 trillion stimulus.
It's a massive amount of money. Greg,
yeah.
Everything you said is exactly right. So let me give an action step to follow up on that.
Okay.
Folks, if that's what you're thinking of doing, if that's what you want to know, spend this time, spend the next 5 to 7 business days getting your records in order. Get your QuickBooks updated. Get your stuff together. Fill out your balance sheet. Get everything going. Make sure you have filed your 2018 tax return. Get all that stuff together. And go ahead and file the extension for your 2019 return. Get that all done, because that's the stuff, the payroll, the proof of the payroll being made, proof of paying the payroll taxes. That's the stuff that's the little bit of documentation that these SBA lenders are going to be looking for. So get it together. They're going to be wanting to see what you were doing from January of 19 through March 1st of 2020. Get it together.
Yeah, and then as soon as this comes, sorry, Greg, as soon as this comes out, what we're going to do is we're going to send you all the information. We're going to synthesize it for you, what the final thing is, and then send that out to you in an email. So just one quick thing, if on InvestorShift.com, you can subscribe to our newsletter, and we're going to send that out literally real time as soon as this gets completely approved. Go ahead, Greg.
So I just wanted to point out, if I'm an investor, if I started investing last year or 5 years ago or 6 months ago or whatever, right? I had a business as of March 1st, 2020. And let's say I had a marketing assistant and an administrative assistant. I'm paying them let's call it $40,000 a year. So I'm paying them, 80 grand in payroll, plus myself. Then essentially that could be as big of a $30,000, $40,000, $50,000 grant that I can use to help get me through the next 2, 3, 4, 5 months. So it shouldn't be, this is a big deal. That's real money that's going to go to Main Street America for sure. So that's why we're excited about this one for real estate investors.
And Greg, what really got me convinced that this was a viable program is the fact that you've already been able to have material conversations with a knowledgeable SBA representative, and
right.
They're like, yeah, this is what it looks like. And I'm like, man, that is like grease skids compared to what we normally see.
Yeah, exactly.
Cool. So anything else on that second pillar?
I think we covered it pretty good.
Okay, let's go to the first one. So individuals, I would say, that's going to affect most of the people on this call. So exactly what are they going to get, Jeff, and about when? I know again, it's still being written, but
the when is the tricky part, Don. The when is the tricky part. Okay, so there's a lot of talk in the news media that people who have filed their 2018 tax returns are going to be eligible for $1,200 per adult. And then there's a $500 per child thing, okay, as well. So how that money is going to be delivered, we're still not sure. When, I expect to see it early April, mid-April, because I can already tell you the attitude of the government is we're going to give it away even if we're giving it away wrong, okay? For whatever reason, that's just what they're going to be. But the key thing is make sure you have filed your 2018 tax return. Now, landlords, here's the tip. Make sure your tenants have filed their 2018 tax return. Make sure they know about this. Check on them, see how they're doing. Is there anything they need? Is there anything you can help them with? Do they have enough groceries? Anything like that. You want to keep the relationship open and helpful and communicative, because when they get this money, you want to be one of the people they pay. They will pay their friends. They will pay the people that care about them. You want them to be paying you, not going down in, big screen TV from Walmart or Best Buy or whatever, okay?
Yeah, so Greg, anything to add to that?
No, so as you guys are talking, I'm going through the questions. So people are asking the website again, InvestorShift. So investor, SHIFT.com. We will get an email specifically about the website after this call. Go through, we're actually going to wait to answer the questions until we get through all of our information. But I know that's a big one. It's been asked like 8 times already. So.
Okay, cool. Yeah, definitely wait on those, and then we can answer those all at the end. So let's transition now. Since you're talking landlord, I know, Jeff, you've got a portfolio, correct? Do you want to talk about how you're managing that portfolio right now, and how you're talking to your tenants?
Extra communication to my tenants, because I'm going to give you a concept that might be a little strange, but my houses, my buildings are not my assets. It's my long-term, dependable, reliable tenants. Those are my assets. They're the people who are paying me every month. I want to take care of them. I've already been in touch with every one of them about what's going on. They know that there is understanding and communication. They all know if they've got a problem, I'll work with them. And I'm going to tell you right now, whoever's listening, and there are hundreds and hundreds of you on this call, please, every one of you that's a landlord, please do not be that guy. Do not be that gal that at 9 p.m. on April 1st, you're handing out past due notices and handing out eviction notices and 3-day or 10-day or whatever your state is. Don't be that guy. Do not be Snively Whiplash, okay, out of Rocky and Bullwinkle. Be compassionate. Yes, I know you've got mortgages, but these are people who are worried about where are they going to sleep and how are they going to feed their kids. We've got time in the system. It's time to be a better human being. Treat your tenants like they're assets. It will really immensely help you going forward.
And you mentioned this, but it's really education, right? Educating that tenant, letting them know what resources are available to them right now that they can in turn pay you. So
right, because you don't know what news they're watching. You don't know. I guarantee you they're not reading the bill, okay? I know they're not reading the bill. So you got to inform them as to what they need to do, okay?
I think the opportunity will be in the people, right? Real estate investors love to analyze the numbers and count how much money they're going to be making on a deal. But you only make money on a deal if you're helping a person, an individual human being, solve a problem. There will be a lot more problems to solve over the next 12 to 18 months than there has been the past 12 to 18 months. And
amen to that, Greg.
That's the perfect, I would love more real estate educators to teach that part of the business, that it's, be more empathetic, be a problem solver. And a byproduct of that is you will do a lot more deals. You'll get a lot more referrals. People that you bought a house from a year ago will tell their brother about you, and then you'll buy their brother's house, which needs work, and you'll make 20, 30, 40 grand on that deal. So opportunity will be there. Okay. I think we have to really focus on solving problems for people.
Yeah, so now I'd like to transition. I'd like to ask you guys the same question, but in a different way. So Jeff, I want to ask you, what should experienced real estate investors with a large portfolio be doing in the next 2 weeks, 3 weeks while they're at home in quarantine. And Greg, I want to ask you the same question, but for new investors, what should they be doing? So Jeff, why don't you start off with the investor that's got a big portfolio?
Big portfolio, medium portfolio, still trying to get a portfolio, medium portfolio, whatever you are. If you're a beginner, builder, ender, whatever it is, this is what I want you to do. Number one, take inventory. What do you have? What do you owe? What's your cash flow look like? Look at all the places your cash is coming in from. Look at all the places that your cash is going out to. Pay attention to all of those details. Then the next thing, and this is really important, is take inventory of your skills. Some of us are great at structuring deals. Some of us are great at finding deals. Some of us are great at finding buyers. Some of us are really good at managing property or managing crews or whatever. Know what your skills are, and then look for other people that can complement your skills, because your network is going to become your net worth in the next 12 to 18 months. We're going to be looking at some opportunities that we've never seen before. We're going through something we've never seen before. Greg, I want to talk about that with you in a little bit, because you and I both been around the block a couple of times on this stuff, but this is something we've never seen before. But you've got to know take inventory, know what you've got, know what you have to work with, because there are going to be opportunities to help people. In the next 2 weeks, right now, it's keep people safe. It's make sure people have got food, okay? Yes, if you've got a tenant that's low on food, you can leave a bag outside their door and not even see them and keep social distancing. You may need to do that, okay? That will go a long way.
Great advice, for sure. Greg, anything you want to add to that?
Yeah. So if you're a successful investor with the portfolio, what I would be doing is looking at your assets looking at which one of your assets you can let go. Like you don't, unless you're right. Most investors that I know with substantial portfolios don't have a loan to value at 30, 40, 50%. If you do, if you own 50 houses and the combined ARV is, let's say, I don't know, 10 million or more, and you only owe a few million, 3, 4, 5 million, you're probably in good shape. But you probably have some assets in there that you could sell, because right now is still a decent time to sell. If you have assets that aren't in your sweet spot, what is a sweet spot? I want to talk about this concept, because I think over the next 12 to 18 months, sweet spot is going to be essential. So a sweet spot is an area of your town, your metropolitan area, that people are moving into, not out of. Okay, the sweet spot is going to be your main areas for investing. If I look at Northeast Ohio, there's hundreds of zip codes that comprise Northeast Ohio. We probably only invest in about a third of those zip codes. We invest in the better areas, the areas that people want to live, a college-educated person, right, like the suburbs in Cleveland. Okay, me personally, unless you're built to invest in the inner city, that's a specific business model. You can't. I don't know many investors that invest in the inner city, in the first ring suburbs, and then the second ring suburbs successfully. People have sweet spots. I have a good friend who owns many restaurants and bars downtown Cleveland, who only invests in the inner city. He won't invest in the suburbs. But for him, the certain zip codes in the inner city are actually, gentrified areas. People are moving into them, and real estate values are going up, right? So he's comfortable there. For me, I wouldn't be comfortable investing there. I'm comfortable in the suburbs where people are moving into, not out of. I think that's the biggest thing. Where the average days on market isn't super high, where houses sell pretty quickly. So if I'm an investor with 50 properties, I'm going to sort of get rid of my properties that over the last 5 or 10 years, maybe, I've accumulated these houses. I'm going to sell some that I've accumulated that are outside of my sweet spot, because maybe my sweet spot has evolved over the last few years. But I'm not going to freak out either. I think people are.
Don't freak out. Don't freak out.
Waiting for. there is going to be more cash flushed in this market than we've ever seen, right? I mean, 3 weeks ago, we were sitting on the best economy in a generation. And then this virus hit, and now they're pumping $2 trillion, maybe $6 trillion into the markets. And they're not just giving it to big corporations, right? They're giving it to big corporations, small businesses. They're giving it to individuals. So this is completely different than 2008 or 9/11. So there will be short-term pain and long-term pain for a small segment of the market, okay? But the general market, I think if you're an investor, don't freak out. Just relax, take a deep breath, and evaluate everything. Do everything that Jeff just said.
Okay, Jeff, anything you want to add before we start with an investor that's just getting started or maybe just done a deal or two?
I would wholeheartedly agree with what Greg said about don't freak out. This is a time to really sit back, look at what you have, so use what you have to get what you want, to get what you need. Think that stuff through, okay? I mean, I could explain it in long detail, but I don't want to go down a bunny trail here, but let's keep moving.
Yeah, so Greg, same question, like I said earlier, but for a brand new investor, what should they be doing in the very short term, like in the next 2 weeks?
So don't freak out. Number one, if I'm a brand new investor and we started the call talking about how, existing businesses can get stimulus money, I might be like, holy crap, I missed the boat. Like I can't believe I should have, I'm so stupid. I should have did this 6 months ago, a year ago. That stuff is a drop in the bucket compared to what you can do the next 12 to 24 months. So if you've not done a deal yet, again, spend right now the next couple of weeks becoming a better investor, just learning more about real estate investing. We unlocked every course, and we're actually updating a lot of these courses right now as we speak. But we've unlocked like 6 courses inside of Realeflow for all Realeflow users. Spend time during the day, into the evening, absorb, right, consume all that content, okay? Then what you have to do is you have to develop a business plan. You have to have a plan. Your plan can't be one of hope. Hope cannot be your plan. You can't hope you're going to do a deal. You have to make a commitment. If you're on this call right now and you're sort of interested in what we're talking about, that's great. But interested people never do anything, right? Committed people do things. Committed people are the people that change the world and really are going to be the people that help get this economy back on track. So you need to make a commitment, internal commitment that, yes, I am going to do this. I'm not going to sit on the sidelines like I did 20 years ago or in 2008, 12 years ago, and see what happened and miss this large opportunity. You have to, right, just make a commitment to developing a plan and then executing that plan. And you didn't miss anything, right? It's not like the cryptocurrency market, the price of Bitcoin, or the stock market. The real estate market doesn't do this every day, right? You're not looking to buy here and then sell up here. The real estate market is very, in certain markets go up, drop down a little bit, but we're not looking to buy properties at 5% off. We're looking for opportunities, properties that need work, that we can put some sweat equity into, that we can purchase, as a rehab, a renovation, or a rental. So we're looking to purchase things still at 30% or more below market value, what the ARV is. But there will be opportunities. So develop that plan.
Jeff, you were going to say something?
Oh, I was gonna comment on, I believe that in the next 12 to 18 months, with the amount of liquidity being shoved into the marketplace, that while we're going to see hiccups in certain places, with the government backstopping almost everything, between the federal government and the Federal Reserve backstopping almost everything, we're going to see the opportunity to accumulate more wealth in the next 18 months than we probably saw in the last 18 years. I realize that's an outrageous statement because we've had a lot of wealth created in the last 18 years if you look at what we've gone through. But there is just so much money being shoved at stuff. And those of us that know how to invest, those of us that know how to build wealth, those of us that are committed to slow and steady wins the race, build a business, get great people on board, train them in systems and processes, and take care of your customer and deliver quality, man, we're going to knock it out of the park.
Yeah. So I want to get to the 18-month plan though, but let's take it one step at a time. Let's
John,
talk
I
now.
have one comment.
Yeah, go ahead, Jeff. Go ahead, Greg.
Now, if I'm a new investor listening to what Jeff just said, I'm actually overwhelmed by that statement because it's like, because I'm thinking in my head again, like, I'm like, man, I missed it. Or you know, it's almost like you're behind in a race, right? They shot the gun, the race began, and you're sitting there not knowing what's going on. Well, this isn't really a 100-yard dash. This is, you know, a 10,000 meter, right? This is a marathon. Okay?
It's a steeplechase, Greg. It's a steeplechase. They're coming back around on another lap. Pick up and run with the pack, man.
So wherever you're at, if you know nothing, if you know a little bit, if you've done one deal, if you've done multiple deals, wherever you're at, I think is today. It's irrelevant where you're at as we sit here on this call right now. What's relevant is what you're going to do after this call over the next 12 to 18 months. And don't let that give you anxiety. You don't have to buy 100 houses over the next year. If you're just getting going, get your first couple deals under your belt. And then what's going to happen is you're going to be further down the path in the forest, and more of this business will reveal itself to you. And then you'll see an opportunity. You'll run into a investor who has 8 rentals they want to sell for a great price. And you'll be like, wow, it took me 6 months to buy 1 house, and now I have an opportunity to buy 8 houses in 1 day. Well, yeah, and you have the money, and you whether it's your private money, IRA, whether it's traditional bank financing, that money will be there. That's what we're saying, okay? But it's not like in 2008, Jeff, didn't the credit markets get crunched? I mean, everything tightened up. It was almost
immediately froze rock solid.
That's not going to happen right now. So we're going to see buying opportunities, but we're going to see a lot of money available to buy. But you know what I'm saying? So don't let that cause you anxiety.
Right. But we're going to, and here's this is important, whether you're brand new, whether you're established, or anywhere in between, there's more money available than ever before, but it's only going to be available to people who look like they've got their act together.
Right.
Okay? So be prepared to present yourself in a professional manner with what you're doing clearly laid out.
Yeah, we unlocked, Jeff, we did unlock the private lending system course inside of Realeflow. And that course is a timeless course. We're doing a couple small updates, but that talks about how to develop a private lending network. And you only need a couple. You only need 2 to 3 private lenders to support a real estate investor. And a real estate investor that's making a few $100,000 or more a year in their business.
Yep.
So Greg, besides the courses and getting things laid out, there's going to be a buying time after this quarantine. So from that point to maybe 90 days out, what should that new investor really be looking for? Where should they be looking for properties? I know landlords are great.
I mean, yeah. So I think you look for properties where you live. I think you're most comfortable. I know this concept of virtual investing, a lot of people, I shouldn't say a lot, a minority of investors virtually invest in hotter markets across the country. And that's fine. You can do that. We have Realeflow users who do that. I would say invest locally in the areas that you know. But if you're asking Don, like when do they start? I think like tomorrow. Like I could find a house today to buy. In that case, I'm going to want to set it up and close in a couple weeks when the quarantine is done. So I don't think there's any specific date. There will be buying opportunities in March of 2020, in April, in May, in June, in July, right? Over the next 12 months, there's going to be more buying opportunities. I don't know exactly when the peak will be, but it's irrelevant. If I'm a successful entrepreneur, I am in business to create, right, to market my business and find these opportunities. They're always there. It's almost like saying the last 3 years, no one was successful in real estate. No, there were thousands, tens of thousands. We've had tens of thousands of Realeflow users very successfully invested in real estate the last couple of years. It just so happens there's now going to be more of them.
Yeah, from my perspective, I think that there's going to be more inventory now for us to look at, so where it's been an inventory crunch for the last few years.
Yeah.
I agree with that wholeheartedly, Don, and I'm glad you brought that up because I think that there are some guys that were a little too over leveraged and they're going to be selling their stuff like Greg talked about, and that's going to bring property on the market that was otherwise not there. So I think you're right. I agree.
Yeah, your big landlords, they're trying to dispose of these properties right now. I see it with some of the guys that I talk to, some of the big investors, they're trying to sell right now. So
I see vacation property. I see people over the last 5 years, stock market did real well. Primary home in Ohio, bought a secondary home in a vacation area. I've talked to 2 people in the past week who are going to sell their secondary home, and they've invested in their secondary home. It's appreciated pretty nicely because they're not emotionally attached to that home. They don't live in it year round. They're willing to sell it at, not at a loss, not less than what they paid, but they're willing to sell it under market value. So right there for both of them, we're looking at one right now, and it's under market value. It's significantly under market value, but they want the security to know that they have that cash in the bank. So for some people, there's going to be many reasons why there's more opportunities, but a lot of it is irrational. A lot of it is if we can maintain a level head in this market, if our mindset can be here, or I should say operate at a little bit of a higher level, everybody else is going to be chaotic and disorganized and crazy, make crazy decisions. Don't get sucked into that. Stay above the noise, as my sons like to say.
Yeah, so let's take a longer term view now. So call it 90 days to 18 months or 6 months to 18 months from now. What's the market going to look like? What do we see in the recession? I know unemployment's going to go up naturally. How's that going to affect a real estate investor?
Jeff, you want to go first?
Yeah, I'm gonna stick my neck out on some stuff here. Okay.
Seeing your crystal ball.
Yeah. Well, that crystal ball is really cracked. But anyhow, I'm gonna stick my neck out on what I think's coming. I'm gonna make a prediction, and then I'm gonna give a pretty careful analysis. The way this has been politically handled in Washington, D.C., I think we're going to see the president reelected, okay? And that's going to be good because we'll have the continuity of where we've been going. But what I really think of how it's going to impact real estate investors is this. With the amount of extra money being pushed into our economy, trillions of dollars, it is going to cause the value or the price of assets to go up. And the price, because there's more money chasing a fixed number of houses, okay? They just didn't go build $2 trillion worth of houses yesterday, okay? But there's now $2 more trillion coming into the economy, maybe 4, maybe 6, we'll see. So, and those are, mind-boggling numbers to think about. So we're going to see the value of these assets go up. But we're also going to see pockets where communities are going to be struggling to get back where they're going to be able to continue to make their payments, where the waitress or the bartender that used to work at the facility down the street that got closed because that owner couldn't afford to reopen, that's going to be the struggling point. And I think we're going to see society carry that for about a year, and then that's going to kind of fade away. And if it's handled correctly, it won't become a campaign issue this fall. If it's handled incorrectly, it's going to become a campaign issue. But I think what you're going to be looking at is there's going to be landlords that have got some tenants that can't make their rent. Tenants are going to have to make some adjustments. I don't see any rent increases happening in the next year. I think things are going to hold still. But there's going to be great buying opportunities. The value of these assets is going to go up. And there's going to be more inventory out there than before. So if you can get your game going, learn what you're good at, create your resources, get your list of assets, know your skills, this is the time to go, go, go.
What do you think, Greg?
What Jeff just said may seem counterintuitive. Like you just made the comment, there's going to be great buying opportunities and the value of the assets are going to go up. So that actually can happen. So I'm going to explain why I sort of agree with that in a second. But what you said could happen because the value of real estate could go up. Think about this. But the irrationality of people is still going to be, people are, even after the quarantine is lifted in a couple weeks or a month, there will be people who will be afraid to go outside for a couple months. There will be people, like, granted, the world is changing. It's shifting right now as we sit here, okay? And so the world will be different, right? I talked about in the video that I recorded last week, you know, we probably in a lifetime, you only get 3 or 4 of these major shifts where the entire world changes. I'm not talking about your state or even your country, the world. 9/11 was one of them for us, and right, this is one of them. So in theory, value could go up, but people are acting crazy and they just want to dispose of assets quickly because they want cash, or they don't want to be that far extended. I think the value of real estate is not going to go up. My opinion is that even with the $2 trillion flushed in the economy over the next month or two, you know, we're sitting here right now not doing anything. So the economy is losing out on the $2 trillion that we were supposed to be injecting it right into the economy in the month of March. So this is just a replacement. To me, it's like a shell game that you know, that essentially will realize we won't know its impact until the end of this year at the minimum. But I think regardless if real estate goes up or down, there's still going to be opportunities to make money. There's going to be more opportunities than there were before. I think in certain markets like Northeast Ohio, I believe real estate is going to be pretty flat here, because even during the 2008 crisis, when Vegas, in Florida, in parts of Texas, California, Southern California, you know, when these were so appreciating so rapidly in 06, 07, we didn't get any of that rampant price appreciation. So we didn't get that depreciation that you guys did in the collapse. So I think it really depends on your market. I think you need to look for value. You need to know how to analyze the properties. Again, there's a course inside of Realeflow, the CIA system, copying, inspecting, and analyzing the properties. Those are 3 important skills. You got to know how to pull comps in real time, not comps from 2 months ago. You got to know how to pull comps, what's selling like right now, and then analyzing and doing that type of analysis is critical. So,
okay,
John,
go ahead.
So I want to focus on the next like 2 years though. Are we at that point?
Yeah,
okay.
Let's do it. Let's go out long term.
Jeff, let me ask you a question then. So okay, if you're an investor right now and you're trying to look at the next 3 years, where do you think the opportunity is going to be? Not geographically, because there's going to be opportunity all over the country. What kind of business would you think, like if you were starting, if I took all your money away and all your assets away, took your business away, and you were starting right now and you had to spend the next 36 months only investing in real estate, what would you do? What would you focus on?
Can you hear me? Because I think you muted me.
No, we can hear you.
No, I can hear you. Okay,
because the screen came up and said that Greg muted me because he didn't. Yeah, whatever. That's all good. All good. If I got wiped out, I would start over with 2 things. I would start over with finding and providing affordable housing to working class individuals. That means I would be either in the blue collar neighborhoods or I would be in the mobile home parks. The other thing that I would be doing is I would be learning how to take my money and put it with other individuals' money, making loans to good rehabbers who are buying good houses in good neighborhoods and turning them into something that somebody else is going to want to buy.
But you don't have money.
Pardon me?
I took all your money away, Jeff. You have no money.
I don't even have $10.
You don't even have $1,000. So you can't private lend. You have to focus on being a residential real estate investor. Would you so you did the blue collar areas.
Yep.
How many houses, what would be your goal to buy? How many houses a month? Would you do a combination of wholesaling and rehabbing. You would find private lenders to fund your rehabs.
I wouldn't do any rehabs, Greg. It would take too much of my time. If I'm starting over, I would focus on relationships and acquiring rental properties with private lenders funding my acquisition. Okay, buying them on owner financing. Rehabbing would take too much of my time and not give me enough chunks of cash. Wholesaling would give me more cash faster if my time, because I'm on a curve with no money, I'm going to do those things that are going to get me chunks of cash faster. That's going to be wholesaling instead of rehabbing.
Yeah. Okay.
What about you, Greg?
Yeah.
How would you do it?
So let me answer this. I think the important thing here is to develop a consistent marketing plan. Most rehabbers are terrible at marketing. So most real estate investors, and this goes back 10, 15 years ago. Luckily, like, we were good at marketing. That's why we were able to ramp up the deal flow to.
You were amazing at marketing.
Yeah, I mean, it's like, so that's, so you mentioned a half hour ago, what are you good at? What are you as a human being right now? What are you good at? Like, what are you passionate about? Because I like analyzing a deal, I'm not passionate about that at all. So it might be a good time to find a partner and somebody that you trust that complements your skill set, right? You're great at this, they're great at this. Obviously, private lenders you should be looking at as partners. I would be focused on marketing, and I would be focused on raising private money. I would be talking to people. I would go through the private lending system inside of Realeflow, and I would memorize the language. That will give you a huge head start. I would have conversations with people because some, I've heard it said that there's going to be a bigger spread between the haves and the have-nots now. I agree with that, and that's a shame. That's one of the things that I don't like at all, that, over the last decade, wealthy people, that wealth has accelerated. Poor people have stayed poor. And I think that's going to accelerate because of what's happening. But I would be having conversations with people with money. It could be my dentist, my doctor, obviously after the crisis, or it could be anybody. But I would be lining up private lenders, and I would be developing one or two, probably two solid marketing channels. I would be getting good at reaching out to people, probably having a VA pick up the phone and call the sellers, or direct mail, and then online marketing initiatives. Again, we have the Facebook marketing masterclass inside of Realeflow, unlocked for everybody. I would be getting good at that, and I would be testing. You have to spend a little bit of money to market. You can't. A lot of investors think I'm going to spend $50 on direct mail, and I hope I get a deal. No, you can't do that. You have to take your entire rebate check, right? The $2,000, and you're going to have to say, I'm going to put $500 a month into marketing for the next 4 months. And then the leads that come in, you have to process them. You have to talk to sellers. You can't be afraid to talk to sellers, but you're solving their problem. So if you have the money and you have the deals, you will be able to make a fortune. So that's really what I'd focus on.
All right, good advice. Good advice. Anything that you guys want to end on before we start with questions? Jeff?
Yeah, I would tell you this. This is an opportunity, not a crisis. This is an opportunity to be a better human being, to improve your skills as being a real estate investor, and to move forward in the new order that we're going to see, the shift in the landscape that we're going to see. This is a chance to just do it. So embrace it, charge into it head first.
Yeah, great advice. Greg, anything you'd like to add?
I would say, right, have a plan, like a strategy. Like, don't just try this business. You have to do the business. Like, so if I could take, two of our users who just started as investors, and one of them, and they both set an account up today, and I could talk to both of them on the phone. And one of them I talked to, and they're like, yeah, we're hoping this works, man. This has to work. I lost my job, and blah, 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 blah. Versus the other one that says, I'm confident this is going to work because this is the plan that I'm going to follow. I put my money on the person with the plan, right? The strategy. the plan, it's not that hard. It's not that hard, but you have to think, okay, like when I first started as an investor, we wanted to do our first deal. Once we did a few deals, I'm like, wow, okay, I want to make $100,000 a month. I want to bring in $100,000 a month into the business. I had a partner, so I knew we'd split that. But I'm like, if we could do that, that would be awesome. So what do you think? Everything we did, like our marketing and our analysis and just the amount of people we talked to each week, they reflected that plan to bring in 100K. And after a couple months, we were doing that consistently, 100 grand a month in profits. So that's my big thing, would be have a strategy, like sit down and write it out, build a mind map, or just take a piece of paper and write this out, have a plan. I think
hope is not a strategy, right?
Yeah, hope is not a plan. Yeah.
Nor is panic. Panic is not a plan either.
Right.
Absolutely. So we started off the call this way. I want to make sure that it's reiterated. InvestorShift.com is really your one-stop resource right now. Today is COVID-19 related and a lot of resources, but you'll see that site shift as time goes by. And as we reach the peak and then we start declining and we come out of this and the industry literally shifts on its own, that site will shift too. So I really want everyone to subscribe to the newsletter. We'll give you up to the minute information in your email inbox. And every day we're curating all of the news of the day that really directly affects you. So again, InvestorShift.com.
Thanks,
Greg,
Don, for doing it. That's going to be a big deal for investors.
Yeah.
So I appreciate you guys engineering that. That's awesome.
Yeah, and if anyone on the call too has feedback on that site, or you want to contribute yourself, there's a big button on the top right hand corner, contribute. Fill that out. That comes to me and my team. So we'd really appreciate that feedback for sure.
Don, I'm going to run through these questions. Is that all right?
Yeah, I don't see them, so
okay,
I actually need you to.
So I'm just going to start at the beginning. We're going to take like 5 minutes. If you guys do have a question, I'd enter it right now. I'm going to answer a lot of these quickly, unless they require one of us to answer more in depth. But the calls are going to be every Wednesday at 3 p.m. Eastern. InvestorShift. Basically, take care of yourself. Yeah, we have an investor in New York City talking about how bad it is. So be grateful. Wake up in the mornings with the gratefulness that you're still alive, right? With the zest for life, because there's no guarantee that any of us are going to be here past this moment. So every minute we get, the one thing that I would say, I know Jeff would agree, is pray, right? Is when you wake up in the morning or before you go to bed, do you have a conversation with God? Do you talk to your creator, to our creator, and tell him how grateful you are for everything he's blessed you with? I mean, just that is enough to change your mindset, and you'll see opportunity where you didn't see it before. You saw chaos and craziness. Once you start learning how to be grateful for everything, even the negative stuff that's happening like this, you'll start to see opportunity much more clearly.
Great.
Pre-foreclosure webinars, yep. What does Jeff do? Jeff is a real estate attorney. He's an early real estate investor I've known for 16 years. He was, when short sales were big, he was one of the top short sale attorneys in America. He's an attorney with private practice in Cleveland and Dallas. Now he focuses a lot on self-directed IRA investing. That's what he loves to do. So, Jeff, good question. I'm under contract for a rental property. I don't know if I should continue with it or cancel. What do you think?
Go forward. Why?
Yeah.
Why would they cancel? Because the contract, if there's a financing contingency in the contract, and the lender pulls the plug, go get another lender. If it was a good deal a month ago, it's going to be a good deal next month.
Yeah.
Go forward.
I agree with that. So we do have some questions, Don, about the stimulus package. I'm going to skip answering those because we've given you guys everything we know right now, but I would imagine we'll know a lot more tomorrow. So we'll probably have to have another call or a resource specifically on this, because we got a lot of questions on how the stimulus package affects investors.
You know what we'll do?
Folks, they haven't finished writing it yet, so we
Exactly.
can't answer the questions.
You know what we'll do though is, Greg, we'll take all those questions and we'll include that in our update that we sent to you out in the newsletter. So we'll make sure we answer all those questions when we know the answers.
Yeah, Jeff, here's a question for Jeff. Jeff, we have an investor who has multiple IRA accounts with under 100,000. So can they take a little bit out of each to equal 100,000?
Yes, they could take, if they let's assume that they've got 3 accounts with $40,000 in each one of the accounts. They could go take $33,000 out of each one of the 3. As long as they don't exceed $100,000, they're fine. But they got to then put it back in 3 years, or they're going to pay taxes on it.
Okay. So in the next question, do they have to only return the initial withdrawal, not the earnings?
Only what they took out has to go back in. The earnings, since they were made outside of the retirement account, stay outside of the retirement account and are subject to taxation.
Yeah. Yep. Can you fund your own deal with the 401k IRA money you withdraw? Absolutely. That's what. So there's now. Think of it this way. There used to be one way to do real estate deals with your IRA. You'd have to self-direct it, and then you'd have to follow the rules for self-directed IRAs, which is beyond the scope of this call, but unbelievably good way. We're going to have more resources in Realeflow. We're probably going to get Jeff on more calls in the next month to talk about this. That used to be the only way. Now you can take out 100K for 3 years and use it as cash, essentially. That's it doesn't get any simpler than that, and that's pretty powerful. Penalty and tax-free, yes. Jeff, can a married couple pull out $100,000 each?
Yes.
$200,000. Now, if Don, now I was going to say a bad joke. If Don had 2 wives, can he take out $300,000? That's a bad joke. InvestorShift. Getting a lot of questions about the stimulus and the SBA loan, so we're going to get that back to you guys for sure.
And folks, while Greg's looking at that, let me be clear. Greg and I want to answer these questions, but in just the 3 hours before this call, he and I both saw contradictory information coming from the Senate about what's in the bill. And they haven't finished writing it yet, so I'm reading a version that's 3 days old. I'm looking at a version my buddy on Capitol Hill sent me today that came out last night, and I'm trying to mix and match and compare. So, folks, they're still writing this thing. It's an agreement in principle only that the news media is talking about, and I'm giving you the fastest, freshest, best stuff we've got. I mean, how many other investors do you know have daily conversations with men who make policy in Washington, D.C.? That's what I do. That's what I'm allowed to do. That's what we're sharing with you.
Yeah, Jeff, we're blessed to have you for sure. So 1099 employees, I've read to what Jeff just talked about. Marco Rubio, his Twitter account, which if you're not following him on Twitter, he's in Florida. And I really like the guy, and I like him more now because of the way he's handled this situation. He's championed the SBA portion, the small business, our portion of this stimulus plan. So if you don't follow him, follow him. But last night he put out a video, 2-minute video, and he specifically mentioned independent contractors being covered, included in this business. So we'll have to see. An
independent contractor is per se a business because they're filing a minimum on a Schedule C or they're filing an S election. So they're a business covered under that code. We read that earlier today.
So I'm going through like 8 questions out of 10 are regarding the stimulus package. So we're going to skip those, and we're going to get you guys more solid information when it's finalized later today. Or it could have been finalized while we've been on the call. I don't know. I haven't checked.
I doubt it, because remember, we're only talking about what the Senate has done. Yeah, I think the House is going to almost unanimously approve it. But until it's signed by President Trump, it's really not the law. So We're giving it to you as we're telling them about the meal as it's being cooked.
Yeah. So this site, this resource is available for anyone. It doesn't. You don't even have to be a Realeflow user. It's a free site. But again, if you even want to tell all your friends about it, InvestorShift.com, and it's going to be a free site. We don't care if you use our software or not. We're helping the community, the industry that we feel is going to be so vital, like real estate investors, rehabbers specifically, people who buy a property and put their own money and work into it. That is so vital to revitalizing a neighborhood. That the whole business of residential redevelopment is a powerful concept. So that's why we're doing this, to spearhead that industry, because we know it's going to be integral to what happens. Okay, so a lot of questions. Again, 8 out of 10 is probably on the Stimulus Act. Jeff, here's a question, like an investor who has many passive investments that are managed by real estate and like property management companies in cities that the investor does not live. What advice can we give them to help monitor what's going on and really try to help others, which I think is a friggin' awesome question. I can tell a lot about that person just based on how they ask the question.
They're a class act, absolutely. I would tell them, get on the phone with every one of their property management companies and find out what these property management companies are hearing from the tenants. And then I would go so far as to prepare some sort of written statement and ask the property management company to deliver it to the tenant, saying, hey, we're here. If you need assistance, this is the time to reach out. We're here to work with you. And let me just take a dive on this one for just a second, okay? I was talking to a large group of landlords the other day. They understand that if I give a tenant a break on rent for 1 month, that is a whole lot better for my cash flow than if that tenant moves out, they're angry with me, they make a mess, and then I've got to fix the unit up and it takes me 2 months to re-rent it at the same or lower rent. Man, I want to keep that existing tenant. Mm-hmm. And when things stabilize, if you've got a tenant that was a problem and they weren't cooperative and they were fighting you at this time, well, that's the guy then that maybe you can help them transition to a better place with a landlord that they like.
Yeah. Or another little tweak to that idea, which is a great one, is half off rent for a few months.
I did that on all mine. I did that on all mine a week ago.
Right. Yep. If you can be preemptive, because going back years ago, I had a tenant that I gave a 3-month delay on rent. And I knew he lost his job. And so I basically said, okay, we'll forgive rent, but let you guys live. It was the winter in Cleveland. He had a family. And after that 3-month period, he never continued to pay me anything. And he was in the house another 6 months, and then he moved out. And so I was out for rent for 9 months. So what I've realized is that that burden of $1,000 a month or $1,500 a month, $1,200 a month, $2,000 a month, whatever your rent is, cut it in half. By you extending that olive branch to your tenant, they will still have in their head, I still owe money to this person. But wow, oh my God, they just cut it in half for 2 months. Like that's a huge deal. And it's the same the same arithmetic as if you gave them a month off, but now you kept them paying something a little bit. But it's going to be situation by situation. We've recorded this, and we're going to make this recording available on InvestorShift. Jeff, we're getting a ton of questions, so let's just keep going. If you guys need to log off for any reason, obviously you can do that. We'll spend another 5 to 10 minutes here answering questions. Jeff, can we clarify how people should handle buying property in the next 12 months? Do we expect a lot of fallout where people can pick up properties inexpensively? So can we expand on that?
I think you're going to see properties come to market at a greater volume than they have been for 2 reasons. You're going to see people who are having to liquidate because they need the cash. I think you're also going to see people who, regrettably, due to the 4D and job loss or whatever you want to call it, they've got to sell. So I think you're going to see more stuff coming on the market there. Is this a time that you think you're going to go prey upon people and take advantage of them? Please don't think that. Instead, you got to have the mindset of how can I help solve your uncomfortable circumstance with that property? How can I solve your problem? But at the same time, there's going to be less competition. And let me tell you why there's going to be less competition. There's going to be some people who got scared out of the market. And I'm glad they got scared out of the market, because that just makes it easier for the rest of us that are in this thing for the long haul to be here. Greg, let me just take one more second at this. I'm going to acknowledge that we've never seen this before. What we're living in right now is a combination of September 11th, 2008, the stock market crash of 2019, and the Spanish flu of 1918. Okay? It's a convolution of all four of those things, but we're also seeing something we've never seen before. We've now seen a federal government more responsive than ever before on trampling on certain property rights, but shoving massive trillions of dollars of money into the economy. So we've never seen this before. But what I can tell you is good business skills will always prevail. Having good business skills will always prevail. Having the right people on your team will always prevail. Having good systems in place will always prevail. Having great resources will always prevail. Remember, folks, this is like Greg said, it's a marathon. Slow and steady will win the race.
Yeah, I agree with all that. I go back to having the mindset that you are doing this business. You're not trying this. Like you're not interested in this. You're committed to this. Like man, if I could just, get that message to you as to that's the difference between entrepreneurially successful people and people that have an entrepreneurial seizure and read a book and think, I want to be an entrepreneur. Okay. These people, they make a commitment. A commitment is, when you get married, you make a commitment, right? When you start a business, you're making a commitment. And so you're not trying this, you're going to do it. And there will be opportunities. There will be more opportunities all over the country in the next 12 months to buy. Right, we're just betting that's going to happen.
Yeah, one more thing to add to that.
I wish we could play the video. There wasn't a video recorded of the lunch that you and I had at that restaurant on West 6th Street in 2006, 14 years ago, when Realeflow was born.
Right.
We had no idea what it was going to look like. We just knew it was a great idea.
Yeah. We were committed.
We
were committed.
Yeah.
Don, what were you saying?
Yeah, I was just going to add to your point too earlier that competition is going to be completely different. I know the biggest complaint our users had was there's too much competition. I'm getting outbid. How are these people even making any money on these properties? That's all changed instantly. So the opportunity is definitely out there.
Yeah. Speculate on values. I think Jeff thinks property values are going to go up. I do not. So we'll see who's right at the end of 2020.
That's
a lot of questions on how do you recommend we start building our buyers list? Great question. For an investor with the system, with the plan, what kind of investor are you going to be? Are you going to focus on wholesaling? Right. In that case, who is your buyer going to be? Your buyer is going to be rehabbers, which rehabbers, there's a whole section on marketing inside of legal wholesaling, inside of Realeflow. It's one of the courses available. Go to the marketing section and it talks about building your buyers list. There's 3 or 4 ways, but just talking to, picking up the phone and calling other Realeflow users or rehabbers in your area, going to the RIA meetings and figuring out, you can look up inside of Realeflow, you can look up cash buyers. You can look up in your zip codes that you operate in, look up who the cash buyers are in the last 90 days, and you'll see similar names. You'll see like Enzo Properties bought 4 houses. Wow. Well, let's Google Enzo Properties. Oh, yeah, they have a Google site. Okay, boom, they have a website. Boom, call them up, and you make contact with them, and you simply say, hey, we're going to be investing a bunch of money in marketing to uncover a lot of new property renovation projects. Are you interested in looking at them? And what are they going to say? They're going to say, yeah, of course we are. Okay. Do you buy from wholesalers? Right. And so there's a million ways to build your buyers list, but you just have to put the work in. You have to do the work. If your buyers are going to be, if you're going to buy a property that needs work, renovate it and resell it, rehab it, then retail buyers. Every house you advertise, don't be afraid to use real estate agents to help sell your properties on the back end if you're a rehabber, because that system works, and you'll pay a few percent in commission, but you bake that into your analysis anyways, so you can get on to the next one, right? So it totally depends on what you're doing. But Jeff, any secrets to building a buyer's list?
Talk to people. Talk to people, talk to people, talk to people, because it's relationships. You could have 1,000 people on a buyer's list, but until you know which ones will actually close and have got the money, it's meaningless. You gotta actually talk to the people, find out, are they ready, willing, and able to buy? What do they want to buy?
One more thing to add to your point, Greg, is that we have Power Matching Plus. We actually let you communicate with our Realeflow users in your area. So I highly recommend utilizing that tool as well.
Yeah. Jeff, 2 questions back to back about ARVs. Would we arbitrarily knock down the amount by, let's say, 10%? I personally would just say no. I would think that you have to know what your numbers are. A lot of investors like to purchase at 65 to 75% of ARV based on how much work needs to go in the property. In hyper-competitive markets, you might have to buy at a higher percentage, but knowing that you'll sell faster in those markets anyways. I wouldn't necessarily right now change.
I agree. I wouldn't either.
Yeah.
I wouldn't either. The market has not spoken to tell us if that's right or if ARVs are going up or what. The market hasn't spoken yet. Listen to the market.
Right. Somebody said Trump is not getting reelected. Jeff, do you want to spend the next 10 minutes talking about? No, I'm just kidding.
Hey, it's a free country. They can vote however they want to.
Jeff, note investors, are they going to be affected?
Yes. Note investors are going to be affected. I think note investing is one of my favorite things to do. Note investors are going to be affected based upon their borrower's ability to pay. It's that simple. You need to be, if you're a note investor, you better be in touch with the servicer that's holding and servicing your notes right now, finding out what's going on. What are they hearing from the borrowers? What are they hearing? If you're a note investor and all you're doing is buying defaulted seconds, don't worry about it. If you're buying just nothing but defaulted firsts, don't worry about it. But if you're buying performing paper, yeah, you're going to be a little affected. But get out there, find out what's happening, get in touch with the frontline servicing company that's handling this, and please tell me you've got a servicing company. Please tell me you're not trying to self-service this. Okay,
yeah,
leave it at that.
Jeff, is there any government assistance for those note holders?
Not yet. We'll wait and see, because if we can, what we're trying to see, what our government's trying to do is we're trying to stimulate from the bottom up instead of the top down. And so let's see how this plays out. How quickly do people get back to work? How quickly do businesses reopen? How quickly do customers go back into bars and restaurants and stores and start spending discretionary dollars? That's going to be the key to how quickly we bounce back.
Couple questions on just commitment, like is now a good time? And I would say if you're sitting at home hungry and it starts to snow and you have no food in your house and you realize, hey, I gotta go to a restaurant, but you have to drive through a snowstorm, that's what we're going through. That could be what we're going through right now. Clearly, you're going to have to pay attention to what's directly in front of you more. In a snowstorm, you're not focused on 200 yards ahead of you. You're focused on 10, 20 feet. You drive a little bit slower and your senses are heightened. That's what you have to do right now as an investor, is you have to go get dinner, okay, and bring it home to your family. So you have to realize there's a snowstorm, there's a storm happening. We're not sure if it's going to last for 3 months or 6 months. It could, right, in a very aggressive, what if it just goes away when it heats up? I mean, we don't know because we haven't experienced it. The likely scenario is we're dealing with months of this. So the storm could last for months and a few months after. But that's, again, you got to be committed.
Real quick to add to your point while you're reading questions, I was looking at video from China this morning, and they had an Apple store open and everyone was separated, masks, gloves, like these are the actual residents. And I sort of envision that of how we come back out of this. Everybody's going to be walking around separated at a large distance with their mask on.
Yeah.
And that's probably a month or two out.
Potentially, for sure. Jeff, I'm going to actually, I think we're going to end the call now just because we promised everyone it would be an hour. We're approaching an hour and a half, and we have dozens of questions, but a lot of them are on the stimulus.
Yeah, I think you're making a wise call here, Greg. I really do, because you and I both know this technology doesn't like you to go overtime.
Yeah. So guys, with that said, Don, I want to thank you for taking a leadership position here with InvestorShift, and you guys are going to be seeing a lot more of Don on Wednesdays at 3. And he's working with the team at Realeflow to spearhead this project, which again, doesn't matter if you're a Realeflow user or non-user, or you use somebody else's software. These are going to be resources that you can use to become a better investor. And Jeff, I want to say thank you. We are blessed to have you, and you know, your connections in DC really make it easier on us to get information like this out. So I don't know if you guys have any last thoughts or comments.
Yeah, one quick thing. Next week, and Jeff can talk to this too, I've got Jason Medley on, and he's absolutely phenomenal. He was telling me what he's putting together to present to this group next week, and it's very, very exciting. So he's really going to talk about what you need to be doing in your business today, and then setting yourself up for the future, really granular. I know we hit it at a high level today, but that's going to go into a really detailed, granular look, and he's just a phenomenal resource that we're going to get to next week.
Jason has connections all across America, so he probably, more than anybody else I know, really understands the pulse of residential real estate, buying and selling. He's wired like nobody else is wired.
Yeah, it's going to be exciting.
Yeah.
Okay. Thanks, guys. We'll sign off for now. We'll talk soon. Bye-bye.
Peace. I'm out.
Bye.
Realeflow, proudly supporting freedom chasers everywhere.